Welcome to this episode of ACG's Growth TV. I'm Katie Mulligan with Middle Market Growth Magazine. Today's episode is brought to you by DataSite, whose software as a service platform and applications help dealmakers around the world manage corporate transactions, including mergers and acquisitions, restructurings, or IPOs across the entire deal lifecycle. For today's episode, we're going to look at the year ahead and the outlook for M&A activity in 2021. Rusty Wiley, DataSite's CEO, joins me to discuss what he's expecting to see over the next 12 months. Rusty, thanks for joining me.
Nice to be here, Katie. Thanks for having me.
I think everyone right now is trying to figure out what 2021 is going to mean for business and deals. Just recently at ACG, we had a panel of investment bankers share what they're seeing during our winter summit. But Rusty, I think you bring a really interesting and unique perspective here, since you see how many deals are showing up in the DataSite platform at their earliest stages. What can you glean from that data about what deal volume is going to look like in the coming months?
Yeah, I think, well, first of all, we do about 10,000 deals a year on the platform. So we see a high percentage of the deals that are in the market. And as you pointed out, what makes us a bit unique is we see them usually 6 to 9 months before you actually see announcements in the market. So if you want a feeling for what it's going to be like in the first quarter and second quarter, it really began back in the summer months when we came out of the depth. Really, March and April were the lowest project months we've had in a number of years in the middle of the pandemic. And as we moved into the fall in September, October, November, December, we saw a real ramp in terms of deals and projects on the platform. And those were a combination of sell-side deals, mergers, restructuring, bankruptcies, but just in general, we saw a pronounced acceleration. In fact, in January, we were up over 20% on a year-to-year basis. So we clearly saw a recovery. Those deals will be announced in the first quarter, second quarter, third quarter of 2021. So that's what we're seeing.
Yeah, and there seems to be a consensus that 2021 is going to be a pretty big deal for M&A. What types of transactions are you expecting to see? You alluded to it a minute earlier, but what does it look like out there, and does the mix look different from how it's looked in prior years?
Yeah, so we see 2021 will likely be a unique year. And in fact, we did a survey of about 200 professionals, finance, corp dev in December in the US. And the feedback was that the most significant deal volume was going to be around restructuring. We believe that. We actually think for the first time, we're going to have both a positive deal market and also a restructuring and bankruptcy deal market. Because if you think about it, a lot of those have been delayed by government intervention, and they're going to move into stages of refinancing and restructuring and bankruptcies and emergency mergers. But at the same time, with the available capital in the marketplace and the low interest rates on debt, we see a strong traditional M&A market as well for next year. So 2021 has the potential of being, both types of markets at one time.
Mm-hmm. And in your survey, the 2021 US M&A Outlook survey, you asked respondents to predict which factor will have the biggest impact on M&A, and nearly half cited a safe COVID-19 vaccine. I don't think that will surprise anyone to hear, but the second most cited factor at 29%, I believe, was changes in tax and trade policy from the Biden administration. How do you expect these policies to affect deal making?
Yeah, and it will affect it, but they'll have a longer tail before they're going to become impactful on the deal market. So what will affect deal markets most in the next 12 months is really going to be what's happening with the intervention in terms of keeping interest rates low in markets around the world. So we expect that to produce a really fertile deal market for the next 12 months. What happens with tax policy as it relates to corporate tax or capital gains tax? Either of those would certainly have a dampening effect, as it will make companies more expensive, or it will also lessen the appetite for deal volume. So we view those more as longer term impacts to the market, and the near term is really just the primary government intervention.
Mm-hmm. And another element that we're seeing a lot is talked about a lot is environmental, social, and governance considerations. These seem to be more and more of a focus for middle market investors and acquirers every single year. So I'm interested to know what role you expect ESG concerns to play in deals in 2021.
Yeah, and it's really moved up the priority list in terms of diligence on companies. If we've looked at it this year, one of the things we've noticed in the data rooms around diligence is they're just getting much larger. They were up, 20% on a year-over-year basis, and a lot of that really is ESG. And in fact, the deal makers that we surveyed believe that the greatest risk to deals not happening would be ESG concerns with companies.
Got it. Okay, we'll leave it there for today. Rusty, thanks so much for joining me today on Growth TV.
Thank you. Thanks for having me.